And hello, welcome along to this property marketplace recovery update. Winter is always a sluggish period for property sales, and but there are positive signs, says Kelvin Davidson, Chief Economist of Cotality New Zealand. And from mortgage lenders' perspectives, property transactions have accelerated in recent months, though the pace of recovery has been slower than initially expected at the beginning of the year. And let's just call that the Trump effect on the global fiscal environment. Hi, I'm Kathy Frey, and I'm a real estate salesperson with First National Roper & Jones based in Dargaville, and this is my latest general property marketplace update, helping my clients stay ahead of the curve. Ryan's Real Estate Institute report that although August showed a modest dip in the national median house price, most regions saw median prices lifting on a year-on-year basis from last year, excluding Auckland. Paul Roberts, Managing Director of Property Apprentice, reports that Northland house prices rose 0.4% in August, plus in 2026 economists are expecting lower interest rates and stronger incomes that could drive prices higher. Roberts comments that good news for borrowers is that cheaper finance is on the horizon for homeowners, investors and first home buyers. Additionally, house deposits and mortgage affordability has been at its best levels since 2019, making buying so much more manageable now for many. Apollo Auctions, who are the wonderful auctioneers we use at First National, reported that in the month of August, more than 40% of auction marketed properties sold at or prior to the auction to unconditional buyers, which is awesome, especially when traditionally most auctioned or no price marketed properties sell within the immediate weeks post-auction. To conditional buyers, with us realtors using skilled negotiations, ensuring the sales do cross that finish line. Apollo report that specifically with Northland auctions, there was selective but committed bidding activity, which aligns with my own vendor auction experiences in August. As more borrowers are refinancing from higher older mortgage rates to current interest levels, that is very likely going to be the groundwork getting laid for a rise in property values in 2026, which is what economists are predicting. Regarding the steady level of new construction, while it's not a glut, the total of new dwelling consents still remains in a range of sort of 33,500 to 34,000 annually, which is much higher than in previous downturns. Also, statistically, recent sales are starting to rise again, i.e. more Northland houses are selling than getting listed. So that's great for local vendors. And as David Windler from the Mortgage Supply Company comments, if sales continue to outpace new listings this spring, buyer power may soften heading into 2026, which is good news for sellers. Conversely, in Auckland, there is a supply shift, with Cotality's September New Zealand Property Pulse showing housing stock in Auckland now growing faster than population growth. This overtaking is easing occupancy rates, plus with the supply outpace demand, that is keeping a bit of a lid on house prices in Auckland, including rents really remaining strictly weak for Aucklanders. But additionally, One Roof comments that migration has also slowed that rental demand. Cotality's chief property economist Kelvin Davidson said this all reflects as a bit of a correction on past shortages, not really an oversupply. That's not fantastic news for Auckland vendors wanting to sell for a good price, which can impact those wanting to shift northwards, bearing in mind that 30% of Kaipara Dargaville property buyers are migrating Aucklanders. But oftentimes the local prices here are still so jolly good that they sell up and shift northward anyway, accepting a bit of a less leftover cash in reserves. Interestingly, the property movers market, that's meaning those that are selling to buy, is still a bit sluggish, even though it is in awesome time in the property cycle to upsize, for example, sell a bargain and buy an even better bargain. But it is improving, with those normal factors like school zones still driving many decisions. A final piece of news, over the past 5 years, only an average of 7% of mortgage advisors at any one time believed banks were being reasonably willing to advance mortgage funds to borrowers. So that was kind of a sad reflection. But currently, over 30% of mortgage advisors are reporting banks being willing to advance funds. So that's awesome news for both buyers and sellers, quite a change in trend. And New Zealand economist guru Tony Alexander said that that factor alone is one of several indicators suggesting economic and housing market conditions may be firming. Yay. So that's all for now on this topic. I wish everybody a wonderful rest of their day. Bye.